This is Mike Larson, editor-in-chief at MoneyShow. At our first ever Hometown Investment Masters Symposium in Sarasota, we featured dozens of top experts across many disciplines. One of the highlights of the event was a panel featuring Steve Forbes, Stephen Moore, Ed Yardeni, and Nancy Tangler. They offered rich, actionable insights on the economy, markets, and the intersection of politics and finance, along with much more. Now, as a special bonus for loyal MoneyShow viewers like you, we're making a recording of that session available free. I hope you enjoy the segment and find the guidance these noted experts provide helpful.
I guess I just want to open it to the floor. I mean, Steve, you were talking about a little bit already, sort of how you see the election scenario unfolding. Would you care to expand on that? I mean, where things are now, where you sort of see things unfolding as we head into the 2024 election? Steve or Stephen, for that matter.
Well, you heard my take on it, and that is here we are in December, and the challenges to Trump haven't broken out in the way that Reagan did in 1980. And if they don't make that breakout, the consensus will be right on the Republican side, but won't be on the Democrat side. The real thing on the Democrat side is twofold. How do they get him out? And the second thing is, how do they replace him? What they're hoping is they can do it after the Democratic convention, where they can do it. You used to do it in smoke-filled rooms. Now it would be pot-filled rooms today. And pick a new candidate.
Stephen, I know, given your role, I don't know how much you'd like to talk about that, but perhaps maybe you can speak just in general about the election. What do you think it's going to take for the Republicans to win? How do you think the Democrats can play spoilers? I guess I'm just wondering about, between now and then, your outlook and how you think this unfolds.
Well, first of all, I agree with, by the way, I just love that picture of me. That's like 30 years old when I didn't have any gray hair. I mean, it's amazing.
It's not going to the right hair for a second.
I agree with Steve Forbes. I think the Democrats are going to do everything they can to get Joe Biden out. How many of you in this room think Joe Biden will be the nominee? How many think it's going to be somebody else? Yeah, so the question, of course, is how they do it, Steve. And you're right. I think in their perfect world, they'd like to not have voters decide. They'd like to do it themselves. And so I think this is just a possible scenario that sometime maybe, March, April, May, June, they go to the White House and say, we got the goods on Hunter here. Maybe it'd be good if you step aside. And then, of course, Steve, they have another problem you didn't mention. What do you do with a problem like Kamala, right? I mean, Kamala is a disaster. They don't want to run her. She's even a worse candidate than Biden. And so I think you're right that the people in the smoke-filled room will decide. And I think my betting will be that it will be between three people. One is Governor Newsom of California, who's kind of a Bill Clinton kind of guy, although not nearly as centrist as Bill Clinton was. The second possibility, somebody I'd be really worried about as a Republican, is Gretchen Whitmer, the governor of Michigan, because Michigan is a key win state. And if she can win Michigan, that takes, this is you all know this is a 5-state election, right? It's basically Georgia, Arizona, Michigan, Wisconsin, and Pennsylvania. Those are the 5 states that are going to decide who's president. And then another person possible would be Amy Klobuchar, a senator. My feeling is if this election is about the economy, then I think, Trump stands a pretty good chance of winning. If it's about abortion and social issues and that kind of thing, then I think Trump is going to face a tough time. He's got to win over, he's doing very well right now with Hispanic voters. He's doing actually a lot better than Republicans normally do with black voters. I mean, there's still a big gap, but the gap isn't as big. His big task, I think, is to win over suburban white women. So if you look at what happened in 2016, the reason Trump pulled that big upset, let's not forget, people thought on election day it was a 10-to-1 chance that Hillary was going to win. White Republican women held their nose, said, I don't like Donald Trump, but they still voted for him. In 2020, they did the opposite. They voted for Biden. So I think it's going to be a really close election, and keep paying attention to those 5 states.
Ed, or Nancy, maybe this one will be for you. If we talk about the economic backdrop and the market backdrop, you've been right to be optimistic, Ed, and Nancy, you've talked about some of these companies and sectors that are doing very well. How do you think that plays in? I mean, looking at a fairly optimistic economic and market scenario for 2024, and how does that impact things?
You deferring to me?
Absolutely.
I just came to listen. Listen, I tell my clients all the time, never, never, never invest your politics. I had a friend who sold all of her stocks when President Obama was elected, and that didn't work out so well. Yeah, and then one that sold them when President Trump was elected, and that didn't work out well. So I think what we're focused on, the things that I talked about earlier today, is that I believe we're in the beginning of a super cycle, and that is going to be, really driven by technology, generative AI, cloud computing. I mean, it all sounds very cliche today, but you really can't underestimate the power that will create for productivity gains. And, I was in early 1990, I had my own firm, and we had a bunch of speakers, Dr. Laffer. We had a guy named Woody Brock, and Woody Brock was a well-known economist, a little flamboyant, and he said the American economy is never going to grow above 1% to 2% again. And everybody was nodding their heads. It was kind of a grim time. Remember, we had a recession in early 1990, and it was the jobless recovery recession. And he was wrong. Why? Because of technology. And so I think we have to remember that, we are focused on what's going on in D.C. I wrote a piece 2 years ago and then a redux of it, which was Mr. Magoo's Washington. There's a lot that's going wrong, and I'm not covering over that or being Pollyannish. But as Ed said earlier too, I mean, the markets look past this, and the markets look to the future for innovation and growth. And even with crappy politicians, we seem to muddle through as a nation.
So can I just add one thing to what you were just saying? I agree with everything you said, which was one little asterisk. So if, let's say, Joe Biden or one of the other Democrats I mentioned were to win the next election, it would matter a lot, if Republicans control one of the two houses. Because if they run the field, like look at what happened with Bill Clinton. His first 2 years as president were a total disaster. Remember that? I mean, Hillary care and tax increase, blah, blah, blah. And then the Republicans won back Congress, and he had the biggest boom ever. So I do think the ingeniousness of our system in America is that we do have so many of these checks and balances. But if you get a sweep, then a lot of those checks and balances might go away.
We could use a new Fed chairman.
That's for sure.
Ed, what would you like to add on sort of the backdrop in economics as opposed to some of the political influences we're talking about here?
Well, I agree with Nancy that you should definitely leave your politics at home when you invest and just focus on the underlying fundamentals. And as I said during my talk with you, I think the market and the economy have proven that they are resilient and that they can do well despite what's going on in Washington. And all of us, when we go to work, we factor in some of the disturbances that are affecting our businesses coming from Washington, and somehow or other we work around these things and move forward. Steve Forbes, I think, brought up a very important risk in his talk, at the end of the talk, which was the geopolitical risks. Here we're addressing the domestic political risk, but the geopolitical risks of perceptions that America's in decline, America's weak, America's not responding aggressively to foreign threats. I think that's a major issue. I will continue to monitor the price of oil as one way to determine whether the markets are telling me that things are deteriorating much more quickly in the Middle East, and that at some point here that could affect production of oil either from Iran or else because Iran starts messing with the Straits of Hormuz. Right now, Iran is messing with the Suez Canal, using its proxies in Yemen to do so. So I think that's a big issue. On Taiwan, it's a tough call because I think China's economy is in bad shape. I didn't really have a chance to discuss this, but in some ways, China's doing us a favor. It's been widely perceived that the only way to bring inflation down is to have a recession here. Actually, China's having a recession, maybe a depression in their property market, and much bigger, I think, than anything we saw in Japan or the United States. It is conceivable that the implosion in China will be so great that it'll have global repercussions, in which case the price of oil, the price of copper will be going down, telling me that China really is, in fact, imploding. But I think you can argue it both ways on Taiwan. A weaker China may feel less confident about taking on an invasion of Taiwan right now. A couple of weeks ago, Chinese President Xi gave a speech in San Francisco where there was a conference on trade, and he sounded very reasonable. He used the word friendly, let's be friends, let's be partners with respect to relationships between China and the United States several times. He even practiced panda diplomacy. He said, you know what, we feel bad that we took the pandas away from you folks. We know that there's some kids that really like the pandas, and we'll look into it. In other words, if you be nice to us, let us quietly take over Taiwan, we'll give you some pandas. I thought that was very sweet. That was very sweet. I like pandas, and the more the better. But I think right now he's conveying the notion that he's got a really desperate situation with his economy, and the less we do to help him, the better, in my opinion. I've been against invading. I've been against investing in China. I wouldn't invade China either. It's too big. But I've been against investing in China because, quite simply, they are authoritarian commies. What else can I say? There's no point in doing business with Maoist commies of all, for God's sakes.
Can we say commies?
What's that?
Can we say commies?
I can say it. I just said it a couple of times. But what I can't do is visit China.
You know, it's interesting. I mean, one of the things that China and the U.S. actually did share recently is credit downgrades, sovereign downgrades, right? So I'm curious, there's been a mix of opinions on debt and deficits and how big of a concern that is for markets and the economy. So I guess I just throw it as an open question. I mean, how much does it concern you what's happening, and how much do you think it's going to impact markets, either under a Republican scenario or Democratic moving forward?
Who's that for?
That's
That's for me?
Whomever would like to jump in.
Okay, I'll take it, sure. Well, look, I mentioned in my talk that it's, just because I'm an optimist doesn't mean that I don't worry. Fortunately, I don't have to do that professionally because there's a whole bunch of competitors who spend all their time being pessimists. So I follow them very carefully and try to provide a more balanced view. But it's certainly reasonable to be very concerned about profligate fiscal policy in the United States. It's certainly reasonable to be concerned about the rapidly mounting debt. The interest costs are going to be bigger than defense spending very, very shortly. So that's all very reasonable concerns. However, I think these problems can be addressed politically and may very well be addressed politically after the next election. Maybe I'm naive about that, but again, these are man and woman-made problems that can be resolved. And the other thing is better than expected economic growth based on productivity could help to relieve some of the issues with regards to the debt load relative to the size of the economy. I think the downgrade of the Chinese sovereign debt actually is much more justified by what's going on in their economy and the implosion in their property market. So that's sort of the context in which I would put these two.
And one of the things that you've made this point is that in terms of what problems we have with entitlements, if you just have 3.5% growth, which we haven't had in a generation, those problems go largely away. And I'm surprised the Republicans, which are known as the stupid party, fall into the trap of saying, oh, we got to take your benefits away, raise retirement age, and all that kind of thing. Whereas if you have that 3.5% growth, that gives you the time to put in a new system for younger people, so you're not taking anything away from middle-aged or older people. And in terms of Taiwan, I'm sure Xi and his clique are looking now, maybe not an outright invasion, But what if you seize one of the islands near Taiwan? Back in the 1950s, they tried to seize some of those islands, big ones, Quemoy and Matsu. Ike, behind the scenes, and some of our generals publicly threatened nuclear war if they using nuclear weapons if they tried that. And China backed off. They just seized a couple of pieces of real estate near their coast, but they left the other islands. What if they seize one of those islands and say to Biden, what are you going to do about it? And if we do nothing, China's neighbors are going to say the U.S. is unreliable, and they're going to kowtow to Beijing and do policies that are not going to be beneficial for us.
Why would anyone think that after what happened in Afghanistan? I mean, so, you're right. By the way, on those numbers that you were talking about, we did run the numbers. So the forecast for the economy by the official forecasters in Washington is 1.7% growth over the next 25 years. So I think it was Albert Einstein who said the most powerful force in the universe is compound interest. So look, if you put 3.5% growth in there, you're going to have surpluses for as far as the eye can see. So you don't even need 3.5%. Even if you had 2.5% growth, you stabilize the debt as a share of GDP. So what my advice to policymakers is anything that increases the rate of economic growth through capital investment and so on is good for the country, but also good for deficit reduction. And anything like, those tax increases that I showed you all earlier, all of those would make the debt problem much, much, much worse. They might raise some revenue, but they're going to just, so deplete the revenue base. So even if we achieved, 2.5% growth, the other thing I would say is we need a lot more immigration. We need legal immigration, but we could easily, look, the other big problem that none of us have really talked about here, the biggest problem on the planet right now is massively falling birth rates all over the planet. Look what's happening in Japan, look, even China. Remember we used to worry about overpopulation in China? Now their birth rates are so low, their population, by the end of the next century, we could have a higher population than China, believe it or not. And so you look at these incredibly tragic lower birth rates. It's a big, big problem. We're the one country, Steve, in the world that has this demographic safety valve. If we can bring, my Taiwan policy is we should give a visa to every Taiwanese citizen right now so they could come to the United States if China invades.
Especially the ones that work at Taiwan Semi.
I could ask these panelists questions all day long, but I want to make sure that you have a chance to get a couple answered. And there's this gentleman here in the front that I promised I would get to his. So either you can go to the microphone, or if you relay it, I'll speak it into the microphone up here.
Got the mic for you.
Perfect.
Thank you.
Great panel. Thanks for coming, everybody.
Thank you.
Anybody that doesn't keep coming every year needs to change their schedule. Back to the bank regulation thing. We all know that money flow makes GDP go up, and there's been regulations to the banks. Does that create opportunity for second tier, I'm probably calling it something wrong, second tier lending companies like business development corporations or private equity? Can you comment on those two?
I'm not sure who'd like to take that one. Please.
Well, look, I think one of the developments over the past several years that really have allowed America to outperform the rest of the world is our capital markets. We are less dependent on banks and have more capital available through the private equity and debt markets than other countries. And as a result of that, there's a tremendous amount of money available for innovation. There's also a tremendous amount of money available to deal with distressed situations. During the Great Depression, there was no such thing as a distressed asset fund. But today, there's hundreds of billions, if not a trillion or two, of liquidity sitting in these distressed asset funds where the managers of these funds are constantly looking for opportunities to buy things really cheap, and then they have the funds to turn them around. And I think that's one of the reasons that the economy is going to prove surprisingly resilient. This idea actually was invented by the government. It's called the Resolution Trust Corporation back in the early 1990s. And a lot of the S&Ls blew up, and the RTC did an outstanding job, really, of providing liquidity and getting the assets out of weak hands and into strong hands. And it took a little while, but the economy stabilized and then actually improved. And I think we have the same situation in our country now. So I think it's the fact that there's so much entrepreneurial capital looking to invest in entrepreneurs that has made such a difference to our country, as well as the fact that we're pretty good at restructuring things that blow up.
I would just add, there's a vast shadow banking system in this country, and corporate pension plans should not be underestimated. They have an insatiable appetite for corporate bonds or fixed income securities of any type. They should actually be buying more equities, maybe some less hedge funds, but they're focused because the committees don't want to make a mistake. I used to manage a lot of money for big big public funds, so they buy bonds that are issued by corporations that allows them to be innovative and not have to go to the capital markets. And that isn't changing. You're not seeing that decline. And so they also have the benefit of just taxing when they don't meet their requirements, their actuarial requirements. They just raise taxes on their constituents, and the pension plans grow. And so I think that is also providing a floor. A lot of the companies have been pre-pandemic were issuing debt to buy back shares. So there's also this support structure that's you don't really think much about, but it's there and it's outside of the banking system, and it's not regulated in the sense that banking is. So
I think we have time for maybe, thank you so much. We have one or two more. This lady right over here.
Several of the presenters here have made very good presentations about innovative processes that will extend life. Right now, we have a population growing in age, underpopulation of younger people for jobs, and no infrastructure that is really providing for these people that are aging. And I've heard that, well, their families are going to take care of them. They don't have families. They either don't have families, or their families don't care, or they don't have the money. I've not heard anything that talks about the economic impact of an aging population and no infrastructure to provide for it, and what might be proposed. And I understand we don't want socialism. I understand we don't want a variety of things that are government. But where is the option, and what are we going to do to deal with a population that is 85 plus, can no longer work, has no income to protect it, and what is the approach that we recommend to deal with that going forward?
Well, there's a lot of wealth out there right now. I mean, we've lived through the greatest period of wealth creation in the history of civilization since 1980, with tens and tens and tens of trillions of dollars of wealth. I do think that this, I just made mention of this, the falling birth rates, the fact that we are an aging population is a big problem. And I wanted to mention one thing that's tangentially related to this when we talk about threats to the economy in the future. There was a new report that just came out 2 days ago, didn't get a lot of attention, but it's an international test that's given to children of 3rd grade, 5th grade, 8th grade, high school age students around the world. And the acronym is PIST. I don't remember what that stands for. But ladies and gentlemen, the United States ranks 18th. My God, Poland and Estonia have better test scores than we do in the United States, Steve. So we got a big problem.
Estonia has a flat tax.
Steve Forbes for president.
We really need to do. One of the things Steve Forbes and I have been really involved in is the school choice movement, and we've got to just let students go to good schools. And what's happening in our schools today is really an abomination. We can't compete if we're not, graduating kids from school that can't even read their diploma. So that has to be one of the highest priorities, and that means taking on the most evil institution in America, and that is the teachers' unions.
And in terms of the question, who's going to take care of these people? In a vibrant economy, you're going to find entrepreneurs, find ways to provide care in a more efficient way, whether it's partially in the home, partially assisted living and the like. Get to your thing on immigration. Where there's a problem, entrepreneurs will figure out a way to do it. The other thing is in your parenting years, research shows that daughters take better care of the parents than the sons do. That's why I have 5 daughters.
One last question, sir.
Except in India, the son is supposed to take care of the parents. That's why you want to have a son.
Yes.
Yeah, I took care of my parents for 33 years, so I know. I just want to ask the panel, what do you think of this brouhaha about the BRICS alliance trying to dethrone the dollar in our lifetime?
The BRICS...
Having gold as supposed to be their base. But we don't have gold.
Well, you answered it with the word gold. Unless they create something that is backed by gold, that is managed in Switzerland, not one of the BRIC countries, they're not going to develop a currency that is going to be widely accepted except by political force in terms of international trade. So the reason the dollar rose up was not by force, but because we had the largest, most dynamic economy. To your point on the depth of our capital markets and vibrancy of our capital markets and the variety you find in our capital markets, that's why the dollar rose up and replaced the pound. So the BRICS can make all the noises they want, but unless they have a gold-backed currency that is managed in Switzerland, nobody's going to trust it. Would you trust Beijing in terms of long-term assets or trade and the like?
Brazil?
You're going to want to run away. And no, the BRICS, in terms of monetary policy, are really houses of straw.
Steve, Stephen, Nancy, Ed, thank you so much. Fantastic job.